Good morning, gang. Good afternoon, good evening, or good night, depending on where you are in the world. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed is financial advice. It's for educational purposes only, and it's my view of the market. Now we've got that covered. Right. Bitcoin. Well, what else can we say apart from we've approached 93k? Okay. Are we on track for 100k? Possibly. More than likely. We are in a very strong trend. Okay, so I'm not going to bore you too much with what we've been doing in the group because, quite frankly, if you've not been following us on Twitter, you'll probably have seen everything that I've been posting on there because I've been posting daily updates, including my P&L screenshots as well, so you guys can see full transparency what's been going on. It's been very easy conditions to trade. So what's next? What's next? Does this continue, or do we get some sort of dump? That's what we'll look at today. Right, let's start off with some really simple T8. Right, from this point here, okay, and this is something like a lot of people will talk about. We are in blue sky. Okay, above here, this is all blue sky breakout. So the only thing we've got to work with for resistance now is Elliott Wave on fib extensions, effectively. That's all we've got to work with. Now, there's a good reason why. For example, if you've been following me since back here, obviously we ended up calling this top back in 2021. We also did the same here. And if you've been following me a lot since there, then obviously we call this bottom. And that's thanks to Elliott Wave. Okay, that's thanks to Elliott Wave. So if you understand Elliott Wave and you understand the most commons, and you can apply Elliott Wave to crypto, which is slightly different to applying general textbook Elliott Wave, because there's a few nuances, then you'll understand what I'm talking about here. So effectively what we're going to do, and I'm going to try to give you a bit of a sneak peek, so I want to try to help you guys, okay? And I'm not saying I'm looking desperately to short this market. I want to make that really clear. We are in a very strong uptrend. But if we look at some really basic Elliott Wave, okay? You got a wave 1, you got a wave 2, you got a wave 3, you got a wave 4, and you got a wave 5, okay? Standard Elliott Wave, nice and simple, just to keep it super simple, you've got 1, 2, 3, 4, 5. Okay. Impulses are 5 waves. Impulses are 5 waves. If you want something visually, you've got 1, 2, 3, 4, 5. 5 waves. The market moves in 5 waves. Okay. When it comes to corrections, typically speaking, for the simple corrections, your market will correct in 3 waves. Again, I'm keeping this overly simple because this is a little bit more complicated down here. So when this is all done, I'll be looking for the market to correct in 3 waves. Okay. So this is why I do believe this 5th wave here is going to be the last wave of this current market. And then eventually, when it comes to an end, then we'll be looking for a 3-wave pullback, which would be classed as the next bear market. Okay. Does that mean it's going to happen anytime soon? No. This could continue up and continue up for a very long time. So I don't want you to be fixated on shorts. One thing that I've been explaining to the members for the past couple of weeks is, yes, there are shorts to be had in a strong uptrending market. But quite frankly, the better trades are longs, looking for regions of support to long the market. It's very difficult, especially for those that learn how to trade in a bear market. Or even a sideways market. Okay, if you learn how to trade in a bear market or a sideways market, I did, by the way, way back when. I learned how to trade in a sideways/down market. And the hardest thing to get your head around from a psychological perspective is once the market starts trending, is to stop looking for shorts at every single resistance that pops up. Now, in this instance, the only resistances that can pop up are Elliott Wave targets. Okay, there's a reason why, for example, 2 days ago we stopped where we did, and I'll show you that. So don't try to be the overly smart bear. Okay, I keep saying the same line in the group, dumb brain down. There's a reason why you idiots and your larps of this space make money trading the little pretty patterns, you know, the silly patterns within this environment, because most things work. This is where bad habits are formed, by the way. So whatever you're doing within this, just remember those are bad habits, and when the market eventually changes, you don't want to be using those same bad habits. Okay, But likewise, you do need to dumb your brain down a little bit. So when it comes to finding zones where we potentially have turnaround times, now I don't mean the absolute top. They could be the absolute top, but it doesn't mean I'm going to be setting limit orders there to short, because you'd be a fool if you did that. But effectively, in Elliott Wave terms, what we want to be looking for is we want to be looking for a relationship between your wave 1 and your wave 5. That's the most common way to look for wave 5 targets. There are more, don't get me wrong. There are more ways to do this, but this is your most common way. So your wave 1 predicted from your wave 4. Okay, now what I'm going to zoom in. So you can see here, if you do follow me on Twitter, you'll notice that this here ended up shorting. Okay, I did short against a very strong trend. Yeah, cool. And on a lower term time frame, it ended up being a very nice short. What did we do? Well, we came up, we hit this fib extension, which is clarity. Zoom out a little bit so you can see this again. 2618. In fact, let's just drag this along so we can see it like this. The 2618. Okay, we hit this. We had a nice reaction. We came back up, and then we had a nice bigger reaction. And this bigger reaction was even better because it ended up just a really simple swing failure pattern of this high. Came up, took the high, and then dropped back down. Okay, we ended up doing it a third time. Now this one I didn't short because it's equal highs. I don't like equal highs, so I won't short that. I'm not really bothered about it. All I was bothered about yesterday was looking for a long opportunity within this, and that's what we've got in the group. Once again, that's all posted on Twitter. Follow me on Twitter. If you want to see these setups, they're all on Twitter. You can learn from them. Okay, but you can see fib extensions now are effectively the main areas of resistance that we're going to see. Does it mean that they have to react at these levels? No, it doesn't. But that's your most likely opportunity. Now, in between each one of these levels, and you can see here, the next one's just above us here, around 95k. Okay, is it going to be a set line? Probably not. Probably a bit of a zone. Okay, in fact, let's do it a bit neater. Let's do a box. Got a bit of a zone. Okay, so if this does continue up, which once again, the trend is still pointing up. I want to make that really clear. Oh, hi. Oh, hi. Oh, yeah, kind of ignore that one. No, we're still pointing up. Nothing right now. I mean, I'm looking on the 30-minute chart here. The structure on the 30-minute chart is still up. The structure on the 30-minute for me doesn't lose until you get 30-minute candle closures below there. So everything's still pointing up right now. So therefore, the gaps between these fibs are effectively thin air. Right now it's not, because obviously there is some price action within this. So yeah, you are going to have some natural resistance within this if price comes up there. Okay, but if it does, then you've effectively got thin air to trade in between here, which is often a lot easier said than, yeah, it's easy to trade. Zoom into a very low time frame, you can scalp galore out of this. Okay, if you are holding long from lower, you know, you're not thinking about this. All you're thinking about is these major levels. That's all you're thinking about. A good place to skim some profits, as you've seen. That's what I'm doing. You know, all my spot longs from lower and my leverage plays, I'm just skimming profits as we come up. That's all I'm doing. Just paying myself. Eventually it will turn around, but I'm not saying it's going to turn around at this level or at the next level, 105k. Okay, I'm not saying it will, but these are just the first resistance zones. Okay, so if price comes up here and then rejects, yeah, cool. I might have a short trigger. I might not. I might not. If it doesn't give me a nice clean setup for a short, I won't have a short trigger. It's as simple as that. I'll just be looking at that point and then where is my next long trigger? What price action forms within this to give me an opportunity to get back in another low time frame long? That's all I'll be doing. Okay, so that's upside. This is effectively what I'm looking at. So you got 95, you got 105, and if you want to start going really silly, you got a 115. Okay, again, zones, don't treat them as absolutes. Okay, so that's the first thing. Right, so the second thing is, what do you want to be doing in this sort of market? Well, you want to be looking at regions to buy. So if it does have a bigger pullback, again, I'm not bothered about the actual short of the pullback. I'm more bothered about the long. Where can I long within this? So let's hide that. And let's hide the Elliott Wave, because we don't need that anymore. Just looking locally, where does this impulse start? Well, you'd say down here. Okay, this looks like a really nice clean start to the impulse. Okay, if we zoom out a little bit, do it on the 1 hour, you can see this. From here, you had sideways and down into it, and then you had a really nice clean move up. So what do we want to do? Well, exactly what I always do. So have a volume profile, And let's just keep it really simple, because we don't need to do this overly complex within this environment. Just do a fib pull. Start of the impulse to the top of the impulse. Okay, so what numbers are useful on Fibonacci? And then again, this I talk about this in my course, but I'm actually going to give you guys some free information right now. Okay, in a very strong uptrend, your 236 comes into play. Now, those that have followed me for a very long time, and those that are in my private group, know that I'm not normally bothered about the 236, because I actually think as a fib level, it's useless. And it is useless in a standard market environment, but in a strong trending environment, 236 gets some love. Okay, you know, if we pull this back down, slightly front run it. You know, even with that, you're slightly front running it. So strong trending environments, you start to use your extreme fibs. So you got your 236 here, so that'd be something to keep an eye on. Okay, and you can see massive volume cluster around here. So if it did come down there and got a nice reaction, well, would there be a long trigger? Would there be a long setup within there? Again, you need to understand what your entry models are. Price comes into your area. Yep, that's one check. Then does it give you your entry model for a long? Yes, right, great. Cool, you got a long trigger. If price comes into your area and doesn't give you your entry model, then there's no long trigger. So it doesn't mean I'm going to be setting limit orders down here and hoping I want to see it come into the area and then I'll look for a long. But once again, it doesn't have to come down. This could just continue up. But you're making plans for if it does come down. This is what's important. Well, where's next? Well, you got your 382. Now, quite frankly, I don't really like this 382, if I'm being honest, because it's in this really thin move. It's in a batch of single prints. Okay, in a batch of single prints. Could it be a low? Of course it could. I'll have to wait and see. I don't really like it that much. 0.5, just under your 0.5. Magical 80k number, round number. Big volume. Node underneath it. Possible. You know, we know that people like round numbers in crypto. That's why everyone's obsessed with like 80k, 90k, 70k. Everyone's obsessed with them. Okay. But if it starts losing that, well, what you got down here? Well, you got a golden pocket overlined with the point of control. This is the point of control of the whole uptrend so far, ever since 66k to the current highs at 93k. You got your golden pocket and a point of control overlapping. Now, but you've also got to think, have you got any other confluence there? Oh, throw on some naked point of controls. Look at that. You've also got a naked point of control bang on that level. So you've got 3 bits of confluence there. That's quite high. You know, even just coming underneath that point of control, you got 3 bits of confluence there, include this high volume node. So that's what you want to be looking for. You want to be looking for what regions are the strongest if, and again, this is all about, I can't stress this enough, if it comes down. It doesn't mean I'm looking for a short to bring it down. I'm looking for it if it does just roll over. If it does roll over and we have a bit of a cascade down, where can I buy it? Where's the next highest probability for a long? There, yeah, there, yeah, there, yeah. Again, doesn't have to be bang on the line. Price action's never perfect. It's never perfect. It's often sloppy. That's why you got to wait for price to come into your area and then give you your setup criteria. Okay. So that's what I'm looking at. If it starts dropping lower than that, then yeah, it starts looking a bit funky. Realistically, I'm not going to be overly bearish unless, where are my opens gone? There. Unless it starts losing the monthly open. Then it starts looking a bit worse for wear. And again, I'll give you the clarity for that. Just to be completely transparent with you guys, if it starts losing monthly open, then it starts looking a little bit worse. And the reason why it starts looking a little bit worse is because of this. If you guys cast your mind back, this range, you shouldn't have forgotten it yet, because we've been in it for so long. You got this whole range. This value area high, hang on, let's get rid of that. There you go. This value area high of this 7-month consolidation is sitting, roughly speaking, at monthly open. You start to lose monthly open, that doesn't look as good. Is it bearish and that means it's over? Not necessarily. It could be, but we will never know. But that's your first real sign of any major weakness, is getting acceptance back into this value. Your second sign, which would be a more telling sign, is losing that point of control. So basically looking at the start of that impulse that we measured the fib from there, you lose the start of that impulse. I don't mean a little cheeky swing failure pattern below it. I mean, you fully lose it. If you start losing that, then yeah, it looks a little bit worse for wear. As it stands right now, we are in a strong uptrend. Treat it as a strong uptrend, okay? There's opportunities galore across the whole market to maximize on, okay? Just don't overthink it. Don't try to be the smart bear. As much as you guys know me, I love pressing that red button. I love shorts over longs because I find it a lot easier. Right now, outside of that one that I discussed, I'm holding off on shorts. Because even at those fib extension targets, they are not massively high probability for shorts. Unless it gives me a very clean setup and something very obvious to work with. The green button is the way forward. Okay? So, hopefully you've learned something today. If you have, do me a favour, hit that like button. If you're not subscribed, consider subscribing. And until next time, gang, as you were. Bye-bye.